Welcome to Javed. Thank you kindly for joining me here. It's December 11th, 2025. Tis also Thursday. We had the Fed meeting yesterday, talking about happy days are here again, if you recognize that song back from the last depression. Now, there is a lot that happened yesterday, so let's get started with what's going on in the markets. Got a lot to discuss. We've got the fear greed meter, 36, so elevated from yesterday. The markets did quite well. Jerome Powell came out and they were quite dovish as far as the money, but let's take a look at the numbers. The 10-year yield made some interesting moves yesterday, and we're watching the debt market because that is not just telling us about the rates and about the United States economy, but also abroad. Pair that with the relative strength of the dollar, which is listed as the Dixie at the top, lost a significant amount of relative strength yesterday. Yesterday was above 99. Now, what does this mean? This, in general, translates to an easier money policy. The Fed is going to be printing again. So, in short, more inflation, prices going up. That includes the price of the stock market. Now, this is generalization, not specific stocks. And you've got to take this all on the kind of a background, if you will. We've got cryptocurrencies, which, in my opinion, are down at the moment. They can go down further. Things can always go a different path. However, these dips are now buying opportunities in as much as it's giving you the opportunity to trade the fiat currency, which is going to zero. It is now becoming absolute trash. So trade this while you can for real assets. Real assets, precious metals, gold, silver, Bitcoin, cryptocurrencies, if you're so inclined, stock market, also even bonds, although you get a terrible return is incoming for that, real estate, any of these things, food, ammunition, whatever it is, a garden in the back, chickens, those are all real assets. So our daily driver for today is jobs because it's on the calendar. That is going to be looked at as far as driving the Fed forward on their decisions for cuts. We are deep into a debaser trade and we're going to be watching volatility. So volatility this morning down significantly, 15.77. That is the main watch here. Why do I say that? That is going to be not just lower in the trades, but a complacent stock market. Gold with all of this is increased, so is silver. So I think that once it kind of catches on to what is actually going on in the background, these are all probably going to be going higher in the future, is the more likely probability. So with this, we've got the future saying it's a little bit weak forward. We've got some things going on with artificial intelligence and the confidence in the stock market. Now, the stock market is a bit of a bubble, but the reverse of that is that it's not a bubble because the currency being inflated is pumping all of this. So we've got to watch the confidence and the sentiment going forward with that. So going back onto our daily driver, the Fed cut. The worst part was not the cut because the quarter point was expected, but Jerome Powell announced that they would indeed begin buying $40 billion in debt. So in short, that's different form of QE. They're just doing it different ways of printing. So free US dollars. This is also a way that it is exported out to other countries. They trade in US dollars. And now, since we just made it worth less, they're now getting our inflation in their own countries. So it doesn't matter what their local policies are. The US dollar is still the reserve currency and will affect them. So going back to Jerome Powell's speech, he also pointed out that inflation would be in the 2%, but that because of tariffs, and would not take the blame for any of the printing that they have done. So this little bit of these jobs going back and forth, he doesn't really care. Cash, as I said, is going to trash. We've got a rotation trade. All of the smart money is putting their money into different places, more assets. So that is going to really distort things going forward. He also admitted that the jobs outlook is absolutely awful and there is a distinct K shaped economy where the lower end, so to speak, will feel more pain. And those that have assets are going to do very well. He came out and admitted all of this that we've been talking about for a while. So we are in a new quantitative easing cycle. Massive inflation will be incoming. However, this will most likely take its bit of a lagging effect. So it's not actually going to hit, and we're not going to see a lot of this inflation likely until after his exit because he's leaving in the spring and they're already talking about his replacement. So, shifting to the international markets, we've got Mexico imposing tariffs of up to 50% on Chinese goods, in particular the automobile industry, because that's where they're hurting locally with their production. So it appears in the background that Scheinbaum now is making deals with Trump and kind of appreciating some of the other things going on. Talk a little bit more about what's going on in the region later. We are in a definite currency war, and the United States is doing anything it can to maintain that hold. So, as I said this morning, we're getting initial jobless claims prior to the market open, as well as a trade deficit. And then tomorrow, just going to have a Fed president speak. So, for the most part, the mover was yesterday, making the market green. Now, this split, we're seeing even more financial haves or have nots, and the have nots will be GET UBI, which stands for Universal Basic Income. So either you have hold your own assets and you get to control them and make your own decisions, or you're going to get universal basic income, which will be completely controlled, and your life will be completely controlled, and it will be dictated the type of healthcare you get, as well as all of the quality of life that you get forward. So you've got to make that decision now. There is also a report top 0.001% is holding 3 times more wealth than the poorest half of humanity. So, this is a little bit of an exaggerated number only because it includes all of humanity, a lot of poorer countries that have been suffering from some of this exported inflation, if you will. But this is a significant reminder of what's going on with this split, and it will only widen. We've got China with an ongoing property crisis. So they are looking at also cutting their rates, doing a little bit more easing. They do have a different political structure as far as their monetary policy going forward, but they are going to keep on the stage, if you will, with this currency war. We've got Gemini is from Gemini. They're getting into the predictions market. So they have an increase in their stock this morning by a significant amount and could be giving actually a little bit of a boost to the NASDAQ because Oracle was down significantly yesterday on their earnings. What really happened was their spending. Their spending went overboard, and so a lot of their investors are questioning this whole circular finance concern, everything that's going into open AI. And what this is a warning shot that the confidence in this sector, artificial intelligence, the spending moving forward has now shifted. So there was a time where anytime a company mentioned that they were investing in AI, going to AI, their stock got a boost. So this just shows that that has just reversed. So now if you see a company that's saying they're going to be spending more toward AI, could very likely show that they're going to take a hit. So a little bit about the banking sector. Wells Fargo is calling out what they're calling quote unquote subpar home lending returns. So they got out of the home lending for the lower end and they went into automobile loaning and credit cards. So overall, apparently see things very differently because those markets are probably the highest risk as there is this shift in economy. We've got a lot of automobile loans that are going delinquent. Those get dropped first, as well as credit cards that people stop paying back as they have financial difficulties. So I think those are two of the most high risk sectors you can be as far as with all of this lending. We've also got the house wing of finance, artificial intelligence sandbox. So this is for banking. But I want to bring this up because this is incredibly important. Banks are being allowed to experiment with artificial intelligence now, free of any regulatory penalties, including the consumer protection laws. So, in short, they're going to be allowed. Now, this is just test area, but they're free of any of these. So, the banks are getting a major pass on this, and they're going to come out on top because of this. Now, I want to go into a little bit more of what is happening down in Venezuela as well as the international because it's all tied into the markets. These are all just different forms of warfare, which is driving the United States economy, but also in the Western world. Now, US seized a sanctioned oil tanker off of the coast of Venezuela. They're calling them United States pirates. Kind of similar, depends on your point of view. However, it just shows the shift and the escalation that is coming about. The United States is directly meddling in the political sphere as well as others for the trade areas and going to control this one way or another. Now, we've got the opposition leader for Venezuela was evacuated. She now is up in Europe and kind of hiding out. She is saying that freedom is coming soon, but again, she was evacuated and so she escaped and is no longer in the country. So it's quite interesting. Directly after letting her daughter take the Peace Prize for her yesterday. Now, back to the warfare because this is driving the economy. United States Navy partnering with Palantir, again in the news. 448 million artificial intelligence submarine shipbuilding deal. I've been speaking about Palantir for a long time. The other concurrent to this one would be Anduril. Anduril is the company that is putting out drones, but Palantir is the artificial intelligence of the US military. So Zelensky talking Ukraine post-war plan. Now this is an interesting group. Bessent, Kushner, and Fink. So you've got to ask yourself, even if you allow the Treasury Secretary, because they've got to lay out the costs for this rebuilding, and Kushner, because he is negotiator there and actually was appointed. But what is Fink doing? Fink, if you don't know, is head of BlackRock. So these discussions on reconstruction is going to be a massive amount of money pouring in through these corporations, and they will determine how this actually gets laid out and going forward, who will be prosperous in these areas. So just pay attention to the little things in these headlines, sometimes tell you a lot more. Now, first, US Gulf of Mexico oil leases on auction under Trump attracting 372 million in bids. Now, do you think it's coincidence that some of the largest oil companies, BP, Shell, and Chevron, are looking after these drilling rights in Mexico? Now Mexico is playing along with the United States as well as new possible regime change for Venezuela. Seized oil tanker. So from all of these, it doesn't take a lot to see through exactly what these wars are all about. So just want to leave you with that. I hope you have a wonderful day. And if you're trading, keeping these things in mind, that these are the backgrounds and kind of going to drive the direction of where things are going. For now, until the stock market absolutely blows up, we're in an inflationary environment. It's a little bit shaky here, certain areas, but the buy the dip, I do expect that to come back in retailers, and we'll see. So with that, have a wonderful day, and until I talk to you again, resist.